SoundHound continues to be a stock that a lot of investors have a lot of faith in the company's future growth and prospects in artificial intelligence as the use of audio within AI starts to get more widespread. Now, I've questioned a lot of that because I think a lot of the value that SoundHound could potentially extract from the market is going to ultimately be taken by models that are more generalizable. They're used for a lot of different things. Think about the Gemini models or the OpenAI models. And those are ultimately going to eat up value from kind of these niche applications today. But I do want to go through SoundHound's recent earnings report and highlight just how much impact the company is getting from recent acquisitions. This looks like a very, very high growth company, but is that really the case today? I think once you dig into the numbers, the answer is no. So let's go through that. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start with an overall look at SoundHound's financials. And I'll just go through some of the high level numbers here and put some long-term context to it. $84.7 million in revenue in 2024. You can see that that was about double what the company made a year earlier. That looks like phenomenal growth. I'll get to some of the context behind that. But the other thing to look at is net loss, $350.7 million. Now, there was some one-time charges related to acquisitions in that loss number. The operating loss was actually $111.8 million. So the operating loss was more than they generated in revenue. Free cash flow, negative $109.5 million. So again, no matter how you look at it, this is a company that's growing revenue, but it's burning a ton of cash, and it's burning about $1 in cash for every dollar generated in revenue. That's just an alarming number to be anywhere near that. I don't care how much you're growing. If you're burning cash, the more you grow, you're just in a terrible position financially. So when you look at the company overall and you see a market cap of $3.9 billion, I really question whether the company is going to be able to live up to that. But let's go through some of the things in the company's recent fourth quarter earnings results and look at where their growth is actually coming from, because you look at this earnings report and you see a lot of positives. Revenue was up 101% to $34.5 million. 101% growth is really phenomenal growth. One of the things that they do gloss over in this earnings release, in this press release, is just how much of that growth came from acquisitions. We knew that there was a couple of big acquisitions. I'll get to those in just a second. But usually when you make acquisitions, you say, you know what, on a pro forma basis, we would have grown this much, and then acquisitions added to that. Management really wasn't doing that, so they're kind of hiding the ball here. And anytime management isn't forthright with how much of an impact acquisitions are making on a company, you want to just kind of file that away and say, that's sort of a red flag. I want to investigate that a little bit more. You can also see that adjusted EBITDA, maybe, depending on how you're looking at it, a better look at how much money the company is making, but negative $16.8 million. So not quite one-to-one like I talked about with free cash flow or net loss, but still negative $16.8 million. And that's taking out things like stock-based compensation. So even that number is pretty generous for the company. But what are these acquisitions that I was talking about? The first one is the acquisition of Amelia. This was a company that was acquired in August. There was a number of things that management thought was going to be really good for the company, leading to conversational AI, expanding the company's user base, revenue and cost advantages. And they bought the company for only $80 million in cash, plus future earnout potential. And they said that in 2025, the company expects to exceed $150 million in revenue. Amelia itself was going to bring in about $45 million in revenue is what they thought for 2025. So that just put some numbers behind this. The other acquisition that they made, not as many details behind that, but was all set. And this added to the online ordering platform. So it could potentially be a valuable acquisition because of the synergies there. The other acquisition that closed in 2024 was announced in 2023 is with Sync3 Restaurant Solutions, over 100,000 restaurant locations combined in the pipeline once that was integrated into the company, and over 10,000 signed. So again, the idea there was to increase the user base and kind of get more leverage on the development. But what's alarming was the actual impact of these acquisitions on the company's financials. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The Sync3 and Amelia are included in the consolidated financial statements for the fourth quarter and for 2024. In 2024, Sync3 contributed $12.0 million in revenue and a net loss of $7.5 million. I'm going to focus on the revenue side. Amelia contributed $42 million in revenue and a net loss of $8.5 million. That's important because when you look at these full year numbers, you can see that $84.7 million worth of revenue in 2024. If we just take that number, subtract 42 million and then minus another 12 million, those are the two acquisitions, revenue would have been $30.7 million for the year. That compares to revenue a year earlier, $45.9 million. So the business that SoundHound had in 2023 would have dropped by about 1/3 in 2024 if it weren't for these acquisitions. Here's the other way to look at it. Right below this disclosure here, it says the following table includes unaudited pro forma financial information that represents combined results of the company as if its business combinations were completed on January 1st, 2023, beginning of the comparable prior year. So basically what they're trying to do with this table is say, if all of the combined businesses as they existed in 2024 were combined going all the way back to the full year of 2023, what would that look like? And you can see that revenue would have fallen by 6.6% and the net loss would have been $375 million. So even if all of these companies were combined in 2023 and 2024, revenue would be on the decline. So technically, SoundHound grew revenue 100% in the fourth quarter. But when you really dig into the numbers, the company's business as it exists today is on the decline. That's the real story for SoundHound, is that this is a company that's growing primarily through acquisitions. And even those acquisitions, as they're brought together, are not creating a very good company. It's not creating a growth company where the companies where you're adding 1 + 1 and it equals 3. You're also not adding profitable business together. You're adding money-losing businesses together. And so you're just compounding all of these problems. Now, the market hasn't seemed to care, but eventually the market starts to care about these things. You need to have organic growth. Any sort of bolt-on acquisition needs to make the core better, and that's not what we're seeing with SoundHound. And I think eventually that is going to fall apart because right now SoundHound shares are trading for 44 times sales. Price to earnings multiple doesn't matter because earnings are negative. So it's a negative price to earnings multiple. But that enterprise value to sales is just absolutely crazy, even in a high growth tech industry. But this is not a high growth business. This is a low growth or negative growth business. Now in 2025, management thinks that full year revenue can get to $157 to $177 million. That's great. But again, going back to 2023, the businesses as they existed were to $154 million. So that would be barely growing from the 2023 base. And in 2025, 2026, we're going to get more competition in this space. We're going to have better AI models. We're going to have more generalizable AI models. And all of that is going to create pressure on SoundHound's business. So you don't have a solid foundation. You have a niche business that could potentially be valuable, but it is not proven to be valuable or profitable. And all this competition is coming into the space and you're papering over that with acquisitions. All of these are major red flags to me. That's why I think SoundHound is going to be in a much worse position a year from now. Wouldn't be surprised to see the stock fall 50, 80, even 90% over the next year as this bubble that SoundHound has been in starts to unwind. So look at those financials and see where that growth is really coming from, because with SoundHound, everything is not as it appears. That 100% growth in the fourth quarter, not really as good when you start digging into the numbers. But hopefully that was helpful in thinking about where SoundHound could be a year from now. Let me know your thoughts on the stock. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.